Good morning. Good morning, everybody.
Morning, Gareth.
Welcome this morning. Hello. Good to see a nice crowd building. It'll be a minute or two, I'm sure, as people come in through the waiting room and join us and just get their tech connected. So we'll just give it 30 or 60 seconds as people arrive. But good morning, everybody. Lovely to see a nice crowd developing for our first employer forum of 2026. So do welcome. Glad everyone is joining, and hopefully everyone has had a reasonably nice restful break. As we are going to be discussing, there was a lot going on in 2025, and I suspect a lot more to come in 2026. Now, just as we get started, so Chloe, I think we're recording already, aren't we? Looks like we're going to have a nice live crowd today. We had nearly 200 registrations for this session. It's obviously a point of interest, but I know a lot of people catch up on the recording. But for those of you joining live, welcome. Thank you for joining us this morning. Hope everyone did have a restful break and is having a solid start to 2026. Just as we get started, I never think virtual meetings are an excuse to not do a little bit of networking. So it'd be great if everyone wants to introduce themselves through the chat box, say hello, who you are, where you are, who you work for. And throughout the session, please feel free to use the chat box to, give your views, your thoughts on the topics that we're discussing. If you've got any particular questions, can't guarantee we're going to be able to answer everything. I think, I've been training accountants for, nearly 30 years now, 28 odd years. And I'm not sure I've known a period of so much change going on and actually still a bit of clarity to land with some of those areas. I know the government and the government departments are still engaging in quite a lot of consultations and conversations with employers particularly, but with training providers. So I know there's still some things to land and more clarity to come, hopefully in coming weeks and months. Good to see a few people saying hello through the chat box. Do, as I said, use that chat box. We'll try and keep an eye on that during the session. Just if you've got any comments, reflections, observations, questions that our panel can perhaps try and cover for you. Now, just to give a rough idea of how we're going to manage this session between now and around 10 o'clock. We're going to break it down into broadly 3 phases. So to start with, there's a bit of an update on not everything that's going on, but some of the key changes that either we've seen through 2025 or are now looming in 2026. We're then going to have half an hour actually hearing from some awarding bodies. Now, actually, I appreciate not everybody on this call is going to work in the accountancy and finance sector like I do. And I think a lot of this content is so broadly relevant to every sector across the economy. Hopefully there'll be plenty of interesting points. But, my key demographic is the professional and business services sector, and particularly the accountancy sector, audit, tax. So we're going to be hearing from some of the key awarding bodies in that sector for half an hour or so. And then we're going to spend the last half an hour actually getting an employer's perspective on some of these changes and actually hearing from a couple of my own colleagues from what they're hearing from employers. But I'm also hoping we'll get some input from the group, from the audience. So be prepared later on. So probably around about 20 to 10, I'm actually going to be hopefully inviting contribution from the audience, particularly employers in the audience. What are you thinking about the changes that we're discussing? What are you doing about the changes that we're discussing? Fairly short and sweet. I'm not expecting anyone to do 5-minute PowerPoint presentations at that point, but if anyone wants to do 30, 60 seconds just reflecting or even thinking about what are you still hoping to see through the rest of this year, So at that point, do feel free, you know, if you want to contribute, put your electronic hands up, that would be fantastic. But we're going to kick off giving a little bit of an overview of some of the key changes. And in fact, to start with, I'm going to be helped by my colleague, Chloe. So Chloe, I don't know actually if you want to introduce yourself to start with, and then you can set up the slides we're going to be using.
Yep, sure. Hi everyone. Thank you, Gareth. Sorry, my name is First Intuition Marketing on here, but my actual name is Chloe Matic. I am working closely with Gareth at First Intuition on all things policy, so just keeping up with the ever-changing environment and making sure we can inform colleagues and employers about the changes. I also work in the marketing and communications part of First Intuition, so you might have seen me in that part as well. But yes, I will share some slides if they work.
Fantastic, thank you, Chloe. And for those of you that don't know me, so my name is Gareth. I'm Policy Director for First Intuition. So along with Chloe, we do a lot of our engagement with policymakers, such as the Department for Education, such as Skills England, also with key awarding bodies in our own sector, so the likes of the AAT, ACCA, ICAW, who we're going to be hearing from later, but also more broadly with other organisations, other stakeholders in the sector. So lots of conversations with people like the CBI and the IOD, other organisations involved in lobbying around skills and the economy. Even at devolved level, actually, Chloe and I were in our Reading office yesterday talking to the local senior leadership team about what they can do to engage with local skills improvement plans across Berkshire and Hampshire, for instance. So yeah, so Chloe, should we sort of kick off and start talking through the overview we wanted to give? So this is going to look at the changes we saw hitting in 2025 and some of the things we're expecting over the next few months of 2026. So if we move on to, and just to sort of set the scene, and I must admit, I mean, I've been in this sector training accountants, working with clients all around the country for nearly 30 years now. And if I go back, even 5 or 6 years, really the key external stakeholders that we tended to work with were the employers that employed the accountants we were training, and also the awarding bodies. So, the accountancy awarding bodies. The last few years have seen a dramatic change in the focus we've got to take, because I'm sure, as most people on the call are very familiar with, apprenticeships particularly has become such an important way that a lot of employers are bringing talent into their organizations, supporting their development, really great tools for retention within organizations. Obviously, apprenticeships involve government funding. So the last few years have really seen this big change towards a much more focus on relationships with the likes of the Department for Education. FITT, if any of you remembers FITT before the changes that came in recently. We've now got Skills England, this new body. And again, we're engaging there. We've now got DWP, the Department for Work and Pensions, because the Apprenticeships Directorate, some of you will be aware, a few months ago actually moved from DFE into DWP, although we do have a joint skills minister across DFE and DWP to try and ensure there's good coordination and links. So, this work that Chloe and I now do, to be honest, 5 years ago, didn't actually exist within First Intuition. This is something that we've started to put far more time and energy and effort into, including, as you said, Chloe works, across policy and marketing, which I think is a great double act. And Chloe does a lot of our kind of PR work, because so much of what we're doing is also then, involved with marketing and making sure that we're communicating what we know through press releases, even through webinars like this. And actually, the reason we think it's important to be involved with all of this policy world is there is so much change going on that's going to affect the employers we work with, it's going to affect the learners that we're supporting. We need to make sure that we're, as ahead of the game as we possibly can. So making sure that we understand the changes as they come. There's a lot of swirling, communication. There's a lot of rumors flying around in this area, and it's trying to make sure that we understand what is actually confirmed truth versus what is just a rumor swirling around. That's going to allow us to actually make sure that our client base and the learners that we work with are best placed to respond to these various changes. And actually, it also allows us to take, one of the reasons that Chloe and I were in Reading yesterday, for instance, meeting John and Ryan on the local team, is that gives us an opportunity to engage with the employers we work with in all parts of the country. And I can see on the call, you know, I can see employers I work with in Hull, for instance. I can see employers that I work with in Ipswich. And you know, the fact that we have these direct relationships with clients all around the country, we can listen to their priorities, their issues, and make sure that we're feeding them in, so that whether it's policymakers at government level or policymakers at the awarding bodies, that we can try and ensure that some of the changes they're making will land as effectively and as impactfully for those employers as possible. Chloe, do you want to move on to the next slide and perhaps give us a few ideas?
Yeah, so following on from what Gareth has just said, obviously there's a lot of changes going on with funding and in the skills and education space. A lot of them are not so great, but we in the accountancy industry are in quite a good position, especially as an accountancy training firm, because, well, firstly, we're in the one of the government's industrial strategy key growth sectors, which is professional business services. So we sit within that, which means that we get funding from the government. They're focusing on these sectors. Also, a lot of the government's focus around funding is on young people, which again, we educate a lot of young people, we train young people at entry-level roles, so like 4, 3, 5, which is a lot of what we offer as well. Also, they're very focused on small to medium-sized businesses. Again, we have a lot of clients in that space. So even though there is a lot of change going on and a lot of distribution of funding, we actually think we're in quite a good position to make the most of a lot of that, and that a lot of our clients actually shouldn't be too concerned, because compared to other industries, the government seems to be focusing on what we are. Also, another thing that FI do a lot of is collaborate. So as Gareth kind of mentioned, we're got our boots on the ground, speak to a lot of regional and local employers. And we do also have very good relationships with the awarding bodies, with local colleges. So we can actually partner with them and make sure that firstly, we have access to funding, but also that different learners can get the information that they need. Gareth, I don't know if you want to add anything else on that.
No, I just totally agree with you there, actually, Chloe. I mean, I think, you know, with all this change going around, I mean, apart from anything, I think, you know, First Intuition, we've proved ourselves very good at dealing with change in the last few years, you know, basically from 2020, when the COVID pandemics and the lockdowns hit, you know, we've actually shown just how agile we can be. And I think we're extremely well positioned with, you know, the learner demographic we work with, you know, the sector that we work in, our links. You know, we've got, I think, nearly 25 offices around the country, so we're very well placed to be involved in those local skills systems as devolution becomes, you know, more and more important. So yeah, you know, I think it's, you know, it's an exciting time for our sector and for us, actually. Now, so talking about some of the big changes, in fact, the first one we're going to reference, which, you know, has been a matter of conversation for something like, what, 16 months probably now, Chloe, in terms of, you know, the announcement that was first made in the 2024 Labour Party conference around the plans to defund level 7 apprenticeships. Now, there was then actually a long, I guess, conversation between government departments, employers, providers around how that should look. And actually, you know, I can understand for some people the disappointment around what happened, and it's this month that it's really started in terms of the restrictions in funding. But actually, again, a lot to be positive about in terms of the fact that the reason the government is restricting funding for level 7 to certain age groups is actually to then free up funding for other areas that could be quite useful. We're going to be talking later about short courses funded from the levy. There could be some exciting stuff coming there. But also, I think it did show that the government is, you know, they're listening, and they're actually, you know, keen to hear from employers, from providers. I think the original plan with level 7 was going to be a blanket defunding across the board. But actually, having heard an awful lot of input from business, you know, they have actually preserved, and Chloe was talking about the focus of the government on young people, and particularly at entry level. So, you know, we do still have, you know, the funding available for level 7 up to the age of 21, which is fantastic. So we'll give the opportunity for, you know, graduates, for some school leavers to actually still benefit from the level 7 funding. And in fact, this is where I'm actually going to introduce, we've got a very special guest joining us this morning, which I'm really delighted. I've actually got Paul from the Department for Education, because I posted on LinkedIn about the Level 7 defunding, this new age cap at 21 or below to be eligible. And Paul, quite rightly, picked me up in a message on it that actually that age cap of 21 is not for everybody, is it, Paul?
No, that's right. Hi everyone. So yeah, I'm Paul from Department for Education. Just quickly introduce myself. I'm staying in Department for Education while my apprenticeships colleagues, as Gareth mentioned, are moving over to Department for Work and Pensions, but I still work closely with them, and particularly on care leavers' access to apprenticeships. And that's right.
Sorry, Chloe, do you want to shut down our slides? And then I know Paul's got some slides he wants to share, because I think this is a message really worth highlighting, which I'm delighted Paul's joined us.
There we go. I hope that's working. It looks more or less okay. Can you see my slides? Oh, hang on. Let's try again.
That's coming up now, I think. Yeah, there we go. Fantastic. Thanks, Paul.
Marvelous. Thank you. Yeah, so yeah, I work in Department for Education and have worked on apprenticeships for several years, but also look across every aspect of education and training from post 16 onwards, but with a particular focus on supporting more disadvantaged people to get into those opportunities and do well when they get into them. And that's right, Gareth, I did pick you up a little bit, didn't I? Because actually, and it wasn't really picking you up, because it's more maybe a minor failing of government, really, that we haven't communicated the age exemption for care leavers at level 7 very well, or maybe it's not been a priority and amongst all the other things that we had to get across to the sector. So not everybody knows, for example, that sorry, I'm just trying, there we go. Not everybody knows that that if you're aged up to 25 or 24 and under, and you've been in local authority care, then you can still start a level 7 apprenticeship, and the government will fund it through the levy. And so just going back to basics, someone who's a care leaver is someone who's been in local authority care, and there's a legal definition for a care leaver, which is that they've spent 13 weeks in care, and some of that time must be on or after their 16th birthday. And usually to access support, they're aged under 25 across a range of different types of support. And there's around 10,000 care leavers in each year group. That's been going up. So now each year around 12,000 young people leave the care system. And when they do that, they're supported by local authorities, and they're leaving care teams. They usually have a personal advisor who can support them in things like access to accommodation, housing, and with their education and training options. They're often referred to as well as care experienced, and so that's another bit of terminology that comes up. And in apprenticeships, when a care leaver accesses an apprenticeship, they're entitled to a £3,000 bursary, and that's tax-free. And if they're claiming universal credit, it doesn't impact on that income from benefits. And it's really important for care leavers who are usually living independently. They don't have the benefit of living at home or having other types of family support. And we know that £3,000 can make the difference between them considering an apprenticeship in the first place or succeeding when they're on an apprenticeship and completing it. And this is really important because we know that their outcomes generally can be really bad compared to their peers. So they're 3 times more likely to be outside of education, training and employment, or NEET. And many have low attainment, not through any fault of their own, that they've just had really disrupted childhoods, and they haven't, and they might have been moved around through different types of accommodation and care settings, and that obviously disrupts their their education, and so often they'll find you'll find that they won't have as good attainment. However, that doesn't mean they're any less talented than anyone else. And I'm not going to play it now, but there's a link in the slides that I'll share to a short interview at the National Apprenticeships and Skills Awards from Bethany Taylor, who qualified as a solicitor 2 years ago, and she's a care leaver. She tells
now,
her
actually, Paul, I've met Beth.
Oh, yeah.
I met her at a UCAS apprenticeships event. You know, she's in the legal sector, which
Yeah.
you know is within professional business services as well as accountancy. But Beth is absolutely inspirational and doing so well in her career in the legal sector. You know, a great example of actually the kind of talent, because as they always say, opportunities are not evenly distributed, but talent tends to be. And actually, she's such a good example of the, you know, the potential, I think, that would sit in that, you know, potentially 30,000 care leavers who would be in that 22, 23, 24 age bracket that actually might be overlooked.
That's right. Yeah, she's brilliant, and she's had an opportunity, but she's had to work really hard. And yeah, she's talented and driven, and yeah, that's what you'll find. Like, many of us are quite privileged in the way we've grown up. I certainly was. I had a secure family background and access to good education, and so I'm one of those people who says, "Oh, I still don't really know what I want to do. I've just sort of pootered along in my career, done okay, but you know, I've never really had to struggle or try hard because I've grown up in a really secure environment." And but what you might often find with people who've been in care is that they are really driven and really loyal, and they really want to get on. And some of them, they have to do that to get on. And they've got experience of struggling through various challenges, so they can be a real asset.
Fantastic. Now, Paul, I'll give you another couple of minutes.
Yeah,
we
I'll
will
go
share
quickly.
the slides, but I don't know if you want to give sort of key messages from your other slides.
Absolutely. I'll go on quickly. There's two things that a lot of employers and people across the sector aren't aware of. One is the care leaver bursary for apprentices. As I said, it's £3,000 and it's tax-free. But we know from local authority data that a lot of eligible apprentices are not getting that bursary. So if you're a training provider or you work with one, if you're an employer who employs apprentices, as I know many of you are, then please do tell everyone you know about the bursary to help us raise awareness of it. And training providers, please make sure that you tell all your apprentices who are aged under 25 at the start of their apprenticeship about the bursary and give them the opportunity to claim it. And then the other things, actually it's two more things. The other thing was that a lot of employers aren't aware of the additional funding that the government pays them for young apprentices, and that's £1,000. It's not a huge amount for an employer, but if you use it for your apprentices to support them, it can make a big difference, for example, with travel costs or clothing or whatever they might need to help them stay on their apprenticeship and in their jobs. And so please have a look into the additional funding. There's links at the back of the slides. And also, as we've talked about already, that level 7 eligibility goes up to and including age 24 for care leavers. And as Gareth just mentioned, there are around 30,000. That's access to 30,000 more people aged between 22 and 24 that could be good for your business. And so in the slides, which I'll share, there's some really good guidance here from amazing apprenticeships for employers on how to recruit and support care leavers in apprenticeships. So it's quite good bespoke guidance for you. And one more thing you might want to consider doing is signing up to the Care Leaver Covenant and advertising your vacancies on their website, because they've got a section there with apprenticeship opportunities for care leavers. So that's a really good place to advertise. So I'll leave it there. When you get the slides, you'll see all these links under these titles. And please do get in touch with me. I'll put my email address in the chat, which I failed to do just now, but I'll do that now. And then please do get in touch if you've got any questions, and I'll be glad to help.
Fantastic. Thank you, Paul. And in answer to Harriet's question in the chat, we will indeed be sharing both Paul's slides and the slides that Chloe and I are running through this morning. So that will be sent out to everyone, along with a link to the recording and a little summary of what we've talked about. But thank you, Paul. I think really important to highlight. And actually, I know how important social mobility, access to professions, you know, is to a lot of the employers we work with. And that opportunity to actually widen their talent pipelines to include that kind of talent, I think will be of real interest to some of the crowd. So thank you very much, Paul. Really appreciate it. And feel free, if you want to stay around as long as you can, you're welcome to hear input that we'll be getting from others as this call progresses. So that's, I just think, a really important thing and often overlooked, that although the age cap extends up to 21 generally for level 7 funding, it does extend up to 24 for care leavers or those with an education, health and care plan. Now, we have responded as an organisation to these changes in level 7. One of the things we can appreciate is we'll have employers who perhaps have mixed cohorts. They might be recruiting graduates, for instance, some of whom are still 21 or below, but some of whom might be 22 or above. So obviously there will be some who are eligible for level 7 funding, some who aren't. And one of the things we've heard from our employers in recent weeks is the importance of consistency, a consistent learner experience for their entire cohort, regardless of whether they are eligible for funding or not. So actually we put a lot of effort over the tail end of last year into developing a kind of new kind of program, which actually takes the real value out of an apprenticeship program. So some of the extra skills development that I know employers really benefit from, the support of a coach, which I know a lot of the learners really value, and actually extended that into what we're calling our Exam Plus program. So it does cover, obviously, the qualification exams as a non-apprentice would typically study, but does give them some of that wraparound support that our apprentices benefit from. And that's actually available as a non-apprenticeship program, just to help our clients. And I know we've had a lot of interest just to give that consistency to their learners, regardless of whether they actually are eligible for level 7 funding as apprentice or not. If that's of interest, I'm sure you can talk to local First Intuition contacts or get in touch with us. Chloe, what's next up?
So yeah, onto the budget. Obviously the budget came out, I think it was November last year, where we kind of heard a rundown of what the government was suggesting for finances. In terms of skills, one of the few things where we saw more funding was the growth and skills offer. We got, I think, another 725 million extra, which is obviously great. And a lot of that was trying to help SMEs. So a positive that's changed is SME apprenticeships have full funding up to the age of 24. Before this, it was 21. So from an admin point of view, that's great. From a funding point of view, that's great. So, and it's also really good to hear that the government is kind of taking on board that SMEs might need a bit more help, especially within apprenticeships. But there were some funding removals, which I will let Gareth go on to.
I guess to do the bad news. So, but I mean, as Chloe said, overall, it's really good to see the government's level of support for apprenticeships. It is one of the few areas that the government is increasing funding into. There are other areas of skills that are going the other direction. So actually that I think is really positive, and it's clear that apprenticeships is a kind of key tool and lever for upskilling the economy. The negative is there is obviously finite amounts of money available. So where they're going to increase in certain areas, like that increase for SMEs to get the full 100% funding, it's got to come from somewhere. So what they did was they had 3 principal changes, and I'd be really interested actually for those levy payers on the call, and feel free to put into the chat box or to comment later when we come to the audience, actually 3 changes to levy payers. And I'd be interested in, of those 3, which ones will have any impact, which ones will change behaviours around apprenticeships. But firstly, well, you might be aware that for levy payers, when they pay money monthly into their levy pots, the government actually adds 10%. Now, that was originally brought in as a bit of a sweetener. It was really a sweetener to show levy payers that actually this was a process they wanted people to embrace and engage in. So that extra 10% was added to levy contributions. That is going to be removed this year. So no longer be that 10% uplift paid in by the government. Second big change is levy payers, again, will probably be aware that when they pay their monthly contributions, they basically have 24 months currently to spend that before it drops off and disappears, that is being changed to 12 months. So they are reducing the expiry period for contributions into levy pots, really, I guess, incentivizing levy payers to make decisions quickly and use those levy pots as quickly as they can. Although, again, the kind of original genesis of that 24 months and the reason it was so long originally is when they first introduced the levy, you might remember we were changing from apprenticeship frameworks to apprenticeship standards. And in the very early days, for some standards, there weren't even endpoint assessments available. They hadn't even developed the EPAs. So they felt that 24 months was going to give enough time to develop EPAs and then allow, obviously employers to get learners onto programs before those pots expired. Now, obviously, we've gone past that being a really relevant issue. So they are now cutting that back down to 12 months. And then the third change is for levy payers who exhaust their levy pots, which is actually quite common in the accountancy sector. I was talking to a couple of colleagues just last week who were saying that many of our levy payers do use up all of their levy pots. I think it's a reflection of just how much training and apprenticeship support there is in the accountancy sector. For instance, I know firms where half of their headcount is on an apprenticeship. Half of their team are actually training. So, it's a great reflection of how much training and support for young people that goes on in the accountancy sector. But it does mean a lot of our levy payers are using up their levy pots and then move into the co-fund situation where if they're supporting further learners, currently they do still get a very generous 95% co-fund for those additional learners. That is going to change to 75%. So the amount that the employer pays is going to therefore increase from 5% currently for those situations where they've exhausted their levy pots up to 25%, which is quite a significant increase if you think about it. 5% to 25% is a five-fold increase in that cost that those levy payers will suffer as they move into the co-fund where that's relevant. So I'll be really interested if anyone wants to put into the chat box, what impact those three measures will perhaps have on behaviour. The other thing, and we haven't seen detail, in fact, the government is going through some consultations literally at the moment. In the last few days, I've heard, some feedback from some of these meetings where, at the moment, there are over 700 apprenticeship standards across the entire sector and the entire economy. That's felt to probably be a little bit over the top, particularly given some of them haven't had any starts. Well, some of them haven't had any starts for years. Some of them have very low volumes of starts. They are going to, and the word they use is streamline, rationalise or reduce the number of apprenticeship standards. So in fact, one of the jobs that Chloe and I are kind of involved in at the moment is we're just trying to make sure that we show to government policymakers at the different departments, we show just how important the standards in accountancy in our sector are to try and ensure, and given that we are within one of the 8 key growth sectors, as Chloe mentioned, we are in professional and business services, having had a few conversations with government departments, it doesn't sound likely that there'll be any changes to the standards within accountancy, which is hopefully great news for a lot of the employers on the call. But we are doing our piece to make sure that the apprenticeships in our sector and their importance to talent pipelines, to opportunities, to supporting young people really highlight. And in fact, something we'll talk about a little bit later, and Chloe will perhaps introduce us, we are going to be doing an employer survey literally in the next week or two to gather a variety of bits of data that will help Chloe and I with our lobbying efforts. But particularly we'll be asking about the importance to employers of the key standards in our sector. Chloe, should we move on? Okay, so devolution. Now, I'll just talk about this fairly briefly. It can't have escaped most people's notice that devolution is a big topic of conversation. It started under the Conservative government and definitely something the Labour government are now continuing with. And it's very much the trend of an awful lot of policy, not just in skills, but across all sorts of areas. Devolution fundamentally is about giving control to local authorities, particularly to mayors in local areas. So people like Andy Burnham in Greater Manchester and other mayors that we've got. Now, you can imagine devolution by its nature is a bit of a patchwork quilt. We don't currently have so-called mayoral strategic authorities in every part of the country. Some are on a journey towards that mayoral devolution, which will be progressing over the next couple of years, really. But one of the things that is currently going on, which is related to devolution, so where we have mayoral combined authorities, or even not mayoral combined authorities, we also have so-called local skills improvement plans. Some of you might be aware of LSIPs. There are about 38, I think, local skills improvement plans across the country, broken down by region. You know, I engage with a number of LSIP processes in different parts of the country personally, and I know a lot of my colleagues do. Now, LSIPs have existed for 3 years. They are just coming to the end of a first sort of 3-year cycle, and LSIPs identify key priorities in different parts of the country, which therefore will receive support from maybe local devolved authorities. Now, currently, and I mean literally at the moment, this month, there's a lot of refreshing going on of those LSIPs. They're now looking forward to the next 3-year cycle. So they're trying to identify what priorities they should be focusing on at a local level. We talked earlier about the National Industrial Strategy, and sometimes there's consistency, but sometimes there are differences. You can imagine at local level there may be, you know, different priority sectors compared to national level. But what I would suggest to employers, to anyone on the call really, is that it's worth looking at, you know, the local, and the LSIPs are generally being driven by the local chambers of commerce. So do have a look to your local chambers of commerce. You know, I've literally filled in about 3 different surveys in the last few days that different chambers of commerce are doing to kind of get opinions around what the priority should be locally. Obviously, I'm talking about professional services, I'm talking about accountancy. I think particularly in my sector in accountancy, there's often a danger that it kind of gets overlooked, because accountancy kind of sits everywhere. You know, every sector has accountants. Accountants support every part of the economy. So it's kind of easy to ignore them, even though they're critically important. So a bit of homework I would set for anyone on the call: have a look at your local chambers of commerce, have a look at these local skills improvement plan refresh processes they're going through, and have, you know, make your voice heard, you know, contribute to any surveys that they're doing. A lot of them are also happy to do one-to-one conversations with local parts of the skills sector. So I would say this month is quite a critical one, because there's a deadline looming in the next few weeks where each of these LSIPs, a draft version, has to be delivered to the department for review. So they're looking at this right now in the next few weeks, in the next month or so. So I would definitely recommend people make their voices heard. What is it you want as a priority locally, your sector, your kind of business, and the kind of skills that you need to develop? Chloe. Super. So now, and you know, from an employer's perspective, this may not have a huge impact in the very near future, but we have in the last couple of months, so from November, Ofsted, who as a provider First Intuition fall under, Ofsted are introducing a new education inspection framework. So they've gone through a significant overhaul of the way that providers like us are inspected, which, you know, will have some implications for employers. I don't want to go through this in a huge amount of detail, but I'll just give a little bit of an overview. You know, in fact, you can see on that slide, actually, we're moving away from what is currently 4 grades: outstanding, good, requires improvement, and inadequate. And First Intuition, I'm really proud that across the country, we have a number of outstanding grades from our most recent Ofsted inspections. And at the moment, you get a single grade across an entire provider. So everything you do and all the various things you're doing is summed up in basically one word, which has kind of felt to be perhaps a little bit, you know, simplification. So one of the things they've tried to do with this new inspection framework is to actually break it down a bit more. So they've moved away from a single word grade to what's more like a report card. You know, if any of you remember your report cards from school, or if you've had kids with report cards, you actually get grades across a number of different areas, don't you? And this is what we're now going to be facing with the new framework. And it's now down to 5 grades in each area, from exceptional, you can see at the top, right the way down to urgent improvement. Now, one thing I wanted to stress, particularly to employers on the call, is that there is not a like-for-like match with existing terminology. So current outstanding will not necessarily translate to an exceptional. In fact, it's highly unlikely to. They've said that exceptional is for the absolute rarest of circumstances. Now, I would hope we might aspire to getting some exceptional grades, but realistically, that's going to be extremely difficult to achieve. In fact, expected, which is, you know, the kind of middle grade you can see there, that's actually been set at actually what's really quite a high bar. You know, they do expect high levels of quality from providers. So I guess just a warning to all the employers out there, and particularly, you know, you'll see this if you've got kids at school, if you're used to seeing outstanding grades for providers you work with, for schools your kids maybe go to, that's not likely to translate into an exceptional grade for any given area under the new system. You know, expected actually is going to be a very good outcome. And in fact, we may even see the odd needs attention, because what they've moved from is what they call a best fit approach. Now, you can imagine if they're looking at a number of criterion for a provider, let's say they're looking at 20 criterion to assess an overall grade. Let's say 2 or 3 of them are outstanding, the bulk of them are good, and maybe 1 or 2 requires improvement. At the moment, the best fit approach means they sort of take the kind of average and the middle. So in that situation, they'd probably give a good outcome, even though there was a couple of requires improvement. With the new system, which is called a secure FITT system, the way I think of it is you're only as good as your worst element. So let's say you had your criterion, you had a few that were, let's say you had 1 or 2 exceptional even. Let's say you had a few strong, you know, majority expected. Let's say you had a couple of needs attention. That means overall you'll get needs attention, because that is the worst. And you know, it's again something we're all going to have to get used to, is that needs attention as an overall grade for an area could mean that 1 single criterion was needs attention, or it could mean that all of them were needs attention. So I just want to make sure that you're aware with communication, there are going to be some changes there. And actually, I don't know, I've got my colleague Crystal on the call. And in fact, Crystal, I know over the years you've been quite involved in Ofsted. I mean, got any reflections on these changes?
I think for the new report card, it's there's going to be more information provided to those who are using those report cards. But I absolutely agree that transition from outstanding is not going to transfer over to exceptional, and expected really is demonstrating a high quality of provision.
And Chris, I might stay with you actually, because if we come to the next slide, another big change going on that some people will be aware of is assessment reform and changes to particularly endpoint assessment. I know, Chris, so you're quite heavily involved in some of the trailblazer groups in our sector. So I was just wondering if you might just give us a quick overview of what you're expecting to see in this area.
Yeah, of course. As we all know, we've seen lots of changes happening to those endpoint assessments for each of the standards over recent years. But this is kind of a change that's going to impact all of our standards. And it's looking at the way in which we assess that achievement of the apprenticeship. The assessment reforms, or the EPA reforms, are really focused around reducing those barriers that exist to achievement and progression, and really being done with a simplification of the process, removing that duplication and over testing, which we definitely do see where people are assessed on programme as part of perhaps a qualification, but then there's still that requirement for an assessment at the end. So it's really removing that need for all assessing to happen at the end and enable that kind of on programme assessing to count towards that achievement of the apprenticeship. What that really means is that all of the assessment plans are going to change around how we assess that achievement of the apprenticeship. We're going to have shorter assessment plans where there's mandated qualifications, or where qualifications are utilised within that delivery. There will be recognition of those assessments, or can be recognition of those assessments that take place on programme. And it's really going to give more flexibility to assessment organisations, so our professional bodies who are also assessment organisations, to really design assessment that suits. They know the sector, they know their stakeholders, and they really know what's appropriate to show achievement and competence across all of those knowledge and skills. Of course, it was also announced that behaviours are going to be the responsibility of the employers rather than part of that assessment plan. What that means for accounting is level 3 was part of the pilot and has received a lot of feedback. We have seen drafts of it, and there's been lots of consultation and discussion around it. The Trailblazer groups have met across all of the levels of the accounting standards, so level 2, 3, 4 and 7. And accounting is going to be part of that first group of new assessment plans to be published, which we're expecting is going to be fairly early this year. We don't have any definite dates. We haven't seen any final assessment plans. So at the moment, we're really waiting what the next steps are going to be. We should see the assessment plans come out. We should find out what the published dates are and what the go live dates will be for those new assessment plans. And so it will be across the board, but it will be for new starts. So those learners who are already on programme, if you've got learners who are already on programme, they are still working towards their current assessment plan or endpoint assessment they're expecting to sit.
Fantastic. Thank you, Crystal. And as you said, you know, we sort of know where the direction is heading, but a lot of clarity still to come in coming weeks and months. I mean, for me, going back to that point around the changes to level 7 funding and the fact that, you know, other than, as Paul was talking about, the kind of care leavers and those with an education, care and health plan, you know, you're going to have that now limit of 21 and below, which is going to make it even more important to try and get learners to start their level 7 programs before they turn 22, which, and because with this assessment reform, you know, my understanding is it does mean we're perhaps going to see a kind of more efficient journey from, say, level 3 to 4 to 7, that there's going to be less duplication, you know, less of a period after the completion of professional exams. So hopefully it will actually help, you know, I guess reduce by a few months some of those progression journeys. So just a couple of other things before I kind of go to some of our other speakers for a bit of input. So we've already mentioned, you know, some of the reductions in funding that we're seeing in certain areas are to actually free up funding for other areas. Now, another thing where we're still waiting for a bit of clarity on is that they are going to be introducing so-called short courses. So from this April, so actually not far away at all, they will be allowing levy funds to be used to fund some shorter courses, because at the moment, obviously, it's only for apprenticeships, which have, well, a minimum duration now of only 8 months. It came down from 12 months to 8 months last year. That still requires an 8-month programme. And as I'm sure we'd all agree, there are some training interventions that would be really useful that could be done over a much shorter period, maybe a week or two or a couple of months. That sort of short course is being introduced. Initially, it's in some quite limited areas of AI, digital and engineering. And even within those, I think initially the offering is going to be very, very niche and limited. But hopefully as time progresses, they will be rolling out those short courses. And Chloe and I have been having numerous conversations with the likes of DFE, Skills England, even the Department for Business and Trade, talking about the kind of short courses we think would be useful in our sector. So we are trying to make sure that there's going to be some relevance there for particular accountants and firms that we work with. Next slide, Chloe.
Yeah, so just to kind of finish off on those points, Gareth sort of mentioned it earlier about the survey that we're doing, but I just wanted to speak a bit more about it. I don't know if any of you were involved in the big level 7 one that we did about 1.5 years ago. We sent a survey out to employers to get kind of information on learner age profile, their kind of demographics, diversity, progression pathways, and all of that data fed into a nice big report that we used to kind of put our points of view across to government. Gareth and I both feel that that report, because of the breadth of data we had, actually maybe contributed to the level 7 not being completely defunded. What we would like to do is kind of that project again, but just generally with all these policy updates, so that we have a bank of data that kind of proves what the industry wants, what employers want. So then when we're lobbying, we can kind of use that as backup for what we're saying. And a massive part of that, of kind of what Gareth has mentioned throughout this, is we just want to really put across the importance of the accountancy sector to the wider economy, and how it feeds into all different aspects, and it needs to be recognised and not forgotten about. So this survey will be hopefully launching next week. I really encourage you to fill it out if you can. It will probably take about 10 minutes, and it covers a few different topics, some about behaviours due to level 7, some about offshoring, kind of short courses. But all the questions are not mandatory. You can skip sections, but yeah, we're hoping we can then use that data to inform our actions and kind of represent what the employers want. So yeah, look out for that, and please fill in if you can. And just to emphasise Gareth's point earlier about LSIP engagement, again, this is a perfect opportunity to get your voice heard, kind of what you want from local skills, what you need, and it's open right now, and these surveys only take a couple of minutes. We'll try and distribute some kind of links to these, but obviously it's very different in different areas. So yeah, have a look at your local chambers and get in contact. But again, we encourage you to get in touch if you could spare a few minutes, because it's the time that you can actually be heard.
Fantastic, thank you, Chloe. And in fact, Chloe's being a bit humble, actually. I think given the accountancy level 7 is the biggest level 7 by volume of learners that it benefits, and the report that Chloe put together, including some survey results from surveys that Chloe designed and put out, it was by far and away the most comprehensive report I saw on level 7 around, you know, that age profile, social mobility, around progression, around impact on the economy. And I think, you know, if any of you are glad they at least protected funding for level 7 up to 21, and as Paul told us, up to 24 for care leavers, I think you can thank Chloe in large part, because I've heard a lot of officials within the government, even in the recent weeks, who've referenced that report as something that was circulated across government, and that I think played a meaningful role in getting that at least age exemption. So no, I just want to make it clear that when we reach out for surveys, and when, you know, we ask, you know, our employers for help with pulling this data together, I think it makes a difference. Chloe, I think you can probably shut down the slides now. Now, I'd actually now like to get some views from, we are joined by some of the awarding bodies in our sector, and it'd be really interesting. And in fact, there's 3 of them have asked to join us, and as we get their views, maybe we'll kick off by just getting them to introduce themselves, introduce their organisations, and it'd be useful just to get a quick 30-second overview of what did 2025 look like from your perspective. So I might come to, I think we've got Sophie. Do we have Sophie from the AAT here? Sophie Lee, good morning, Sophie. And in fact, I'm looking forward to seeing you later at Canary Wharf when I pop into the AAT. But Sophie, do you want to say hello and introduce yourself?
Hello, so I am Sophie. I am the Education Policy Manager at AAT. And yes, I think given everything that Gareth has said, it has been quite a year. We have heard a few times from officials that the only constant is change, and I think that really is where we are at the moment. So yeah, quite a challenging year, but I think a year that we've learned a lot from, and as we move forward, we'll continue to kind of change as we go forward.
Fantastic, thank you, Sophie. And how about, we've got Rob Alder.
Thanks, Gareth. Yeah, good morning, everyone. Yeah, so I head up apprenticeships at ACCA, and yeah, 2025 was it was an interesting year. Obviously, the start of the year we were there was rumor and counter rumor about what was going to go on with level 7, and then when that was confirmed, it was very much then working with partners, that's our employers and training providers, to understand what that really meant, and to try and support employers in making you know, the right decision going forward. And that process is still ongoing. And then right at the end of the year, we had the latest kind of endpoint assessment changes that Gareth and Chloe have mentioned, and that provides, you know, new challenges to us as an endpoint assessment organisation. And we're working again collaboratively with other bodies and Skills England to find the right solutions there.
Fantastic, thank you, Rob. And actually, you mentioned the word collaboration there, and actually I think that's been a real theme, even of the last 5 or 6 years, actually, the way that organisations, perhaps who might even be viewed as competitors in some circumstances, are actually working more and more closely together. We, for instance, Rob, we've worked together for many years now, haven't we? I mean, in various guises on both of our parts. So, no, thank you for joining us this morning. And if I can then introduce Alex.
Hi everyone, I'm Alex Collins from ICW. Yeah, a real year of two halves, to use a footballing analogy. The first half, Gareth, you were our chief negotiator, even if people didn't feel that they wanted to be negotiated with, representing the sector. So I think that was a real win in the collaboration of everyone coming in and getting employer, apprentice and professional body voices involved alongside tuition providers. I think it did show how, since the launch of apprenticeships in 2017, we've all committed to this fully, invested a lot of effort into rising apprenticeship starts, improved achievement rates, really making sure apprenticeship standards work for employers. And so to have some of that undone in terms of access for all ages was really sad. But we did have to pivot quickly. And as Rob alluded to, there's been some useful developments in terms of shorter courses and some announcements that enable us to give some level of improved choice. And at ICW, that improved choice was very much focusing on our level 4 alongside the launch of our next generation ACA, so that employers can have that homogenous feel to training if they have to mix and match level 4, level 7, and our level 4 gets 7 exemptions from the 14 ACA exams now. So 50% of the ACA can still be funded. So that's a great place going into 2026. But it's also very sad that it's not 100% as it would have been had we continued with the non-age-based funding. As you can tell, I'm still not completely over it, Gareth.
No, I don't. Yeah, well, I mean, it's still an ongoing conversation. I know, Chloe and I, one of the reasons we're doing this survey to gather data is I think, the government do want to be data led. And so the more we can show them the implications of some of their policy decisions as time progresses, the more chance we maybe have of some changes. I still think that age cap should be a bit higher, where Chloe and I from the outset were suggesting it should be more like 24 or below. So, it's still an ongoing, conversation, I think. And thank you for your kind words at the beginning of your bit. But as most of my colleagues would know, I mean, I have 500 odd exceptional colleagues that I work with, which means I don't need to do any real work anymore. So it does free me up to spend a lot of time, and it does take a lot of time on a lot of this engagement with, whether it's government departments, awarding bodies and the like. Rob, I might come back to you actually. I mean, in terms of, have you got any reflections on the kind of topics that we've been talking about already on this session?
Yeah, I mean, I think the level 7 funding is the big topic, really, and I think most employers we're talking to are still coming to terms with that, really. We knew it was coming, and then obviously there was the age limit, but what does that really mean? And I think that's probably the main reflection that we've had. And I think, as Alex kind of alluded to, there's now kind of a change in employer behaviour that I think is really important, because, okay, the funding is being restricted. So what does that mean? What does that mean for each organisation? And a lot of the organisations, particularly levy paying ones, have got used to that money, to kind of fund professional accountancy. So what does that mean if suddenly that money is not there? So we're seeing lots of different behaviours. Again, as Alex mentioned, there's a lot more interest now in level 4. So ACCA, ICAW, we both offer a level 4 apprenticeship, which previously has probably not had much interest, but now there is real interest in how level 4 could be used to part fund the ACCA qualification. So a lot of interest there, and a lot of interest from the learning providers, including FI, in terms of how creatively that could be used to fund ACCA. So that's a big topic that's happening. There's a lot more interest in recruiting younger people to make sure that they do qualify for the funding. So a lot more interest in recruiting at school leaver level, particularly amongst practice firms. And also what we're picking up is that to make sure that the funding's there, there's an interest in starting off at level 3 AAT and then moving straight on to 7 for some candidates. And again, some firms are exploring what that means, what that looks like. So we're going to a shift there in really making sure they get younger learners in. One of the slight concerns we have got, and again, it'd be interesting to see whether other employers think this and other bodies, is the risk to apprenticeships. I think really, the momentum that has been built over the last few years has been fantastic. They are great programs. We hear that again and again, but we are picking up that in some organisations, particularly in the commercial sector, they might move away from apprenticeships and just fund the qualification itself, or in some cases move away from training. Some of our international organisations are talking around offshoring, so it's cheaper to fund and train accountants outside of the UK without the funding. So I think that's one of the kind of risks that we face with this. And again, it'll be interesting with the survey that you mentioned, Gareth and Chloe, whether that is kind of picked up as well, because that's something that, because as you mentioned earlier, professional services sector is a key part of the industrial strategy. And if this change fundamentally damages that, then surely that's inconsistent with government policy. So if we can demonstrate that, and then we're not picking up that in a huge, but there is a risk, I think, and I think we all need to be aware of that. And some of the solutions we're talking about are ways of kind of, making sure we still get the funding, but if the funding isn't there, then what does that look like? So it's something that we are, looking to support our employers with going forward.
Thanks, Rob. Yeah, I mean, in terms of the accountancy sector sitting within professional business services, I literally had an email yesterday evening, an update on the industrial strategy progress, and it sort of laid things out according to the 8 sectors in little tables. And what struck me was professional business services seems to be at the moment the least priority of the priority sectors. I think we definitely sit in the shade of the likes of construction and defence and care and health. So another thing, as I said, that Chloe and I are doing is trying to make sure that we are, and there's plenty of people on this call that can support this, is just shouting about the importance of accountancy as a fundamental sector in the economy. In fact, we're going to be, so First Intuition, we're going to be exhibiting at the Parliamentary Apprenticeship Fair in National Apprenticeship Week. So we'll have a stall in front of a load of parliamentarians, MPs, hopefully some ministers, maybe even some secretaries of state. Now, you can imagine we are not there to promote First Intuition as a brand. We're there to promote accountancy as a sector. And we're taking 3 great examples of apprentices who have really seen benefits in their careers from, coming as, I think they're all school leavers. A couple of them have done level 7. So we're going to be able to really showcase, how important our sector is and that we can't be ignored. Sophie, I don't know if you have any reflections there. I mean, there's already been a bit of talk about potential focus on level 4 with what's happening with level 7.
Yeah, I think one of the things that we've seen, so AAT did a survey back in last year now, which I can't quite get my head around the fact that it's a new year still, I haven't quite got there. And the first part of the Filling the Gap survey has come out, and we've taken that to Skills England and shown that data, and they did really appreciate, as you'd expect, that kind of numerically driven thing. But what we are seeing is that those skills gaps are still big, and they are feeling like they're starting to get a little bit bigger when we talk about things like AI, cybersecurity, things like that. So I think for our employers, like 29% of them want clarity on what the short courses are going to look like. What does that actually mean for us long term? Because one of the challenges that we've had over last year has especially is future planning, because decisions are made, and I think we are all now used to those decisions being a lot more rapid fire. So businesses are looking at planning not just for this year, for the coming years, and are really struggling to know what that offer would really look like. And the skills that we kind of have identified are, AI and automation, cybersecurity, and then we go deeper and we go to actually, employers are starting to say that some of these critical thinking skills are missing. And that's, I think we've heard a lot about AI and how it's all coming for our jobs, but what it's not coming for is that critical thinking and those kind of skills that we've got attached to it. So I'd really hope that kind of over the next year we see a little bit more clarity about short courses, because I think we all agree it could be a fantastic opportunity to upskill staff already in position and retain staff, because we know that especially in accountancy we do have some issues around retention. So I'm really hoping that we can all work collaboratively to kind of ensure that those short courses are what's best for the profession, and hopefully Skills England will see that kind of value as we move forward.
Fantastic, thank you, Sophie. And in fact, you referenced a report there, and I'm conscious, each of the awarding bodies speaking here have been doing reports or have got reports they're working on, and I'm just thinking immediately, because I suspect some in the crowd might end up at Accountex this year, the big expo for the accountancy sector, and I'm really pleased that for the second year, First Intuition are going to be taking over an entire theatre. We're going to have our talent theatre again, so we're going to be talking about a lot of the kind of issues that will be really relevant to attendees on this call around whether it's funding, qualifications, recruitment, retention, skills development. Got some, in fact, Crystal and I have been working on speaker lists, and we've got some really exciting speakers. And actually, I'm thinking it might be a good platform for the different awarding bodies to actually even raise some of the things they're seeing in the reports they've done. So we'll have some separate conversations, I think, with AAT, ACCA, ICAW about making sure that we can help you, to share the insight that you're discovering on our stages. So I look forward to seeing a lot of you at Accountex in May. But talking of this year, actually, maybe we'll just sort of finish with the awarding bodies. Just thinking about, if you had a magic wand, what would be your wish list for 2026? What are you hoping we'll be celebrating by this Christmas? So perhaps, Alex, do you want to kick this one off?
Yeah, sure thing. Let's turn to some positivity and pragmatism. Yeah, I think a real mixed bag in terms of what employers are doing. So now that everyone's starting to really reflect on the changes and make policy, it'd be really nice if by the end of the year, people have really landed on a mix of professional qualifications and routes that works for them. So we're seeing a real mixed bag, with some people looking at commercially funding apprentices, ignoring apprentices, and some of the larger firms in particular who already had a lower adoption of apprentices, level 4, of course, or people moving from level 3 to level 7 for those relevant learners more quickly. So just that people land on what works for their business, and that rates of commitment to training don't drop, because we are at a real turning point where basic economics dictates that the cost of something going up, and it's going up particularly for those levy paying firms for the various things that we've seen, such as the 10% top up and other ways in which employers co-funding rates when they use their apprenticeship is going to require a business case to find more money, essentially. So natural economics is going to say that the number of apprenticeship starts is going to be challenging. So hopefully by the end of the year, we do find that people have found a mix that works for them. We don't see that drop, because we do need this key sector of business and professional services and accountancy being fueled with young talent. That is the theme and the genesis for the changes that we saw at the budget. And we hope that the unintended consequences aren't that it's opposite for us. And then finally, just 2 points on ongoing work in progress. The level 4 EPA reforms, let's hope that those are concluded and launched, as we will see a real exponential growth in level 4, particularly at ICW, where we had the lion's share of the level 7 market. And now it's age-based. We're seeing a lot of employers wanting to adopt the level 4. And also, I hope that people go for a candidate-led approach. So at the end of the year, we're seeing that people are putting the candidate first, rather than, yes, we have to be cost conscious as employers. I totally get that, but a candidate-led approach and finding ways to for professional bodies like ACCA, AAT and ICW and First Intuition through your learning provision, just making the ability for people to mix and match different routes feel as homogenous as possible, so that if you take on 2 graduates or 20 graduates or 200 graduates, if you've got a proportion doing level 7, level 4, the experience doesn't feel too different to them, and that they feel like they're part of your organization becoming a chartered accountant, not that it's completely different and that they're treated with differences. And I think that's where we're all investing a lot of effort to make sure that those learning journeys create a homogenous experience for those people that are going to join your employment in 2026.
Thank you, Alex. Rob, what are your thoughts for the next 11 and a half months, I guess?
Yeah, and quite similar to Alex in many ways. I mean, I'm really hoping that employers do kind of find their feet with all of this. One of the things that I think was mentioned earlier around, because there's a lot of changes, you know, making sure that everyone understands the changes and you know, communicates clearly the opportunities as well as the challenges. So I'm very much hoping that numbers of starts aren't too negatively affected. And I think there are solutions that will support that. So that's really encouraging. I think the EPA reforms, which I think, you know, we welcome, the kind of, you know, the kind of reduction in over assessing. So I'm hoping that they, you know, kind of introduce and are smooth for everyone. Really hoping that within those apprenticeship units, those short courses, there is an accounting element that the employers can take advantage of. So yeah, so there are some things to look forward to, I think, and hopefully as well, not too many new announcements, at least that there will be a bit of stability so people can understand what the future looks like and, you know, make the right decisions. So hopefully 25 is the kind of year of decision and change, and 26 is more kind of right embedding and getting used to the, you know, the new normal.
Thanks, Rob. And I definitely think the changes to the level 7 funding, obviously, that came in this month, I think was driving a huge amount of activity at the tail end of last year. I mean, we certainly had a very busy 2025. I mean, normally December is quite quiet for us, but I think it's the busiest December we've had in our history ever. Just making sure that learners could get onto those programs before there was the change in funding. And I think now we've come back after the new year, and employers are now looking at this year thinking, right, what is it we now want to do in 2026 and obviously beyond? Sophie, do you want to have the final word?
I think one of the things, and I know those on the call probably have experienced this, one of the things that we did really well last year as a profession was collaboration. And my hope really is that, especially not just in training providers and professional bodies, but really hoping that that employer voice is maintained and continued when we start talking about short courses. That's one of the things that I hope really continues, is that collaborative approach to things, making sure the employer and the apprentice voice is always heard. I also think one of the things I would love to come out of this year is strong progression routes. So when we look at, you know, all the way from education onwards, what does that really look like? You know, where can you go? What can you do? And especially with the introduction of V levels over the next couple of years, we've got T levels. We just need to have really clear routes, not just for apprentices, but for those who support them as well. Whether that's in schools, whether that's, you know, parents and caregivers. I just think that, you know, understanding from start to finish what a career can look like would be so beneficial. Do I think that's going to happen in a year? Possibly not, but it's something that we can kind of start to build on. Would be great. And that kind of picking up on something that Rob and Alex have said, is that support for employers needs to be continued as these changes happen. We don't want people to become disillusioned by the amount of change or the administrative burden. So really hoping that that support, not just from ourselves, but, you know, from the wider landscape can come.
Yeah, and I mean, just reflecting on something you've said there, Sophie, I definitely feel, you know, over the last 28 years or whatever I've been doing this, you know, we've moved from just training people to pass individual exams to get their qualifications. You know, now, you know, we're involved much earlier in the process. I know there's employers on the call who attend things like our accountancy academies, where we're engaging with young people at school to encourage them, well, not encourage them, but to give them full information about careers in the accountancy sector, you know, then developing them through, you know, onboarding, through their qualifications, then even beyond. You know, I'm really excited that we do a lot more around, you know, upskilling people with leadership, with management, with digital skills, all the way to, you know, even potentially up to senior management and partnership. And it's, you know, it's great to be involved in people across, sometimes taking, you know, young people from school all the way through to relatively senior positions in organizations. Now, you mentioned as well there the importance of the employer voice. So as we get towards the sort of last quarter of an hour of this session, I'm going to turn to a couple of my colleagues, Charlotte and David, who actually a couple of our business development and client relationship leads. So they actually have an awful lot of conversations with the employers we work with. So I'm really interested in their reflections on what we've talked about and what they're hearing from our clients kind of at the coalface.
Shall I go first?
Go for it. Thanks, Charlotte. Introduce yourself.
Amazing. So hi, everyone. My name's Charlotte. I head up our client engagement team in London. But as Gareth said, I work really closely with all of the kind of business development and client relationship leads across the group, and Dave and myself also run our sort of internal group business development group. Say group more. So yeah, I think fundamentally a lot of the feedback that I have inevitably echoes what Sophie, Alex and Rob have said. Something that we have seen is, whilst there's quite a lot of hesitancy around what programs our clients want to use, because obviously things have changed quite a lot, there isn't much hesitancy, if any, around trainee numbers. So that's something that's kind of reassuring and instills a bit of confidence. In our recent employer survey, pretty much all of the employers who responded to us, which was quite a big number, confirmed that their numbers aren't going to change this year, and some even may go up. So I think that's really positive. Whilst there is a huge amount of uncertainty, fundamentally these trainees will continue to train, and employers need trainees. So yeah, as Gareth said, we saw a lot of employers of all different sizes from lots of different sectors make use of our December intake. So we had an absolutely bumper December intake, obviously before the kind of restrictions around level 7 came in this year. But a lot of our work over the last sort of 12 months, but more specifically 6 months, I would say, is kind of understanding what our employers' priorities are, whether it's the commercial impact of this, whether it's consistency of experience for their trainees, whether it's recruitment and attraction, or kind of looking at what level of admin burden can they shoulder in all of this. And I would say that we've had a really mixed bag of approaches, and there's still a huge amount of uncertainty out there. So broadly speaking, our larger employers are looking to make use of funding where they can, and where consistency of experience is important for them. So making sure that those who are on the apprenticeship versus those who are not have the same experience. They'll make use of our Exam Plus programme. As the professional bodies said, we've also seen a lot of interest in that level 4 programme. There are some more radical approaches. So some employers we're speaking to are going back entirely to commercial, as it was pre-levy, the apprenticeship levy being introduced. And we do expect to see a lot more school leaver enrolments in the autumn, kind of looking at bringing in those lower level qualifications to progress into level 7. So it's, yeah, like I said, a really mixed bag. Planning is definitely ongoing, and we're doing lots of consultation work with employers to support them in their decision making. Apologies, my dog is making noise in the background there.
Fabulous. Thank you, Charlotte. That's a really interesting perspective. I might now turn to Dave, and actually I'm going to be joining Dave tomorrow at an employer roundtable lunch just outside Chelmsford, aren't I, Dave? So kind of what are you hearing, both in, I guess, the Essex market that you operate in, but even more broadly across the country?
Okay, I'll try and keep it brief, Gareth, but I'm not very good at that. As Charlotte said, end of last year, we saw a rush to get people onto level 7 before the rules changed. I appreciate it's only full working week 2 of the year, but this year I've had at least daily an inquiry about training at level 7 that outside of an apprenticeship, and that is from local authorities, from parts of the NHS, from large businesses that have got finance functions. I haven't had anyone in professional services yet asking me that question this year, but it's a daily occurrence from me at the moment that people are asking about level 7 programs outside of apprenticeships. With the funding rules that you talked about, I've spoken with a number of different businesses, and there's kind of 3 views, or 3 kind of different use cases, if you like, for apprenticeships. The SME case, which is the majority of the clients I work with are SME. That change of co-investment and the rules around co-investment is potentially going to have quite a big impact. The extension of the 0% from 22 to 25 is going to be minimal in terms of how it will affect, because most young people that SMEs are putting through, they're recruiting straight from school. Where it's really going to bite is with people that are career changing in SMEs. And one of our big cohorts is we have a lot of parents that are returning to the workplace that want to gain a skill, and they are almost always going to be over 25. And that changed from 5 to 25%. For an SME, if you're paying a £600 top up today, that's going to go to £3,000 under the new rules. That's a massive, massive change for those small businesses that are trying to recruit and train their staff. One thing that I would say, and I've been saying to SMEs that I've been talking to, is investigate now the opportunities that are open with levy share. Because if you've got big employers near you, and some areas, Essex has got an organisation that organises levy share from levy payers, and SMEs can access it, that is an opportunity to open. I think they're going to be hugely oversubscribed moving forwards, particularly with that movement from levy funds being available for 12 months now rather than 24. So if you're an SME and you've got workers or people that are working for you that are looking like they're going to be over 25 when they start, look into levy share as an opportunity for you. When we look at large employers that are that don't heavily invest in apprenticeships are just looking at movements from, okay, we used to put a lot of people through level 7, and as some people have said, we'll look now at level 4 as our entry route. We'll look at changing the entry route we have. I did get a rather alarmed phone call from a levy-paying practice firm that has a lot of apprentices just prior to Christmas when this news came out. They are very, very worried about the co-investment. The co-investment going from 5 to 25%, as we said, is going to 5x their training cost. They were looking at moving from a recruiting graduates, put them onto level 7, to school leavers going through level 3 into level 4, and they recognise that top-up cost, that the co-investment cost is something that's really, really going to hit them quite hard. And now they're completely reconsidering their recruitment. They are looking at things like offshoring as a potential option. So that's really going to hurt them. The other thing, and the advice that I'm giving some of my larger employers now that are in that situation, is really carefully monitor what your levy account is going to look like. Forecast your levy account for the next 3 years. Level 7 funding, if you've got level 7s on program, that is a levy flow for the next 3 years. If you're recruiting level 4 now, you're going to see an increased levy spend in the short term, that when your level 7s come off program in year 2, year 3, you're going to see a drop down in your levy spend. So if you don't already utilize any of your accounts team to look at your levy spend, I would do that as a project to look at where your levy spend is going to be over the next 2 to 3 years, because it's going to be a bumpy ride if you're changing from a 3-year program to a 12-month program. Hopefully,
thank you, Dave.
Actually,
you mentioned levy share, and I think historically levy share has tended to be from levy payers to non-levy payers.
Yeah,
I think we're going to see a lot more interest in levy payers to levy payers because of this 25% co-fund, which could be covered therefore through levy share. So, you know, if firms are paying the levy and exhausting their levy pots, and you've got clients who are levy payers who aren't exhausting their levy pots, might be worth starting to have conversations with those clients. Or as Dave said, in certain parts of the country, there are brokerages that help to make sure that levy share is happening. I think that's going to be far more interesting to levy payers than perhaps ever before. So, no, thanks for that, Dave. As we get towards the very tail end, I'm interested to get any insight from employers on anything that we've really talked about. So please do put up your digital hands if you're happy to give a quick 30-second reflection in the last 5 or 6 minutes. But I don't know whether, Karen, I can see Karen Fryer, I don't know whether you might be willing to introduce yourself and give a few thoughts on the stuff you've either heard this morning or just in recent months.
Hi, hi everyone. I'm Karen and I work at Grant Thornton in the professional qualifications team. Where we're at isn't potentially useful, but it might be reassuring to other people, is that we haven't concluded yet. We were waiting to hear more about what the privately funded apprenticeship outcome was going to be, and now we've been liaising with FI and other people just to sort of really nail down the options that we've got. But everything that Charlotte said, we are considering. So whether that's the commercial cost, the continuity of experience, the admin burden, you know, we're looking at all of that now. I think we've got enough information to make those calls. So that's what I'm involved at the moment. Yeah.
Thank you. And you know, I think actually that situation, I think a lot of employers are so focused on getting 2025 kind of in the bag, done and dusted, sorted before the end of the year, before the changes came in. I think, yeah, a lot of employers are now reflecting on the rest of this year. Now, I'm glad to see a digital hand has gone up, and I'm particularly glad to see who it is, because by coincidence, this week is the 10-year anniversary of the establishment of First Intuition's office in Leeds. And the very first client I went to go and try and tempt to use us in Leeds was Jill Wright. So Jill, great to see you on the call, and yeah, really interested in your perspective.
Thanks, Gareth. Good to speak to everybody. Good to see everybody. So my name's Jill Wright. I'm from Kirk News Home Accountants. We are based in Leeds. The level 7 change is obviously a bit of a nightmare last year, but actually have ended up okay for us. We predominantly recruit school leaver level. We take probably one graduate a year. We've got about 22 learners at any point in time. When we've generally gone level 3, level 4, level 7 route. And so we get them to be onto level 7 before they turn 22. So generally we are okay. We've just had a bit of a pickle recently when we're trying to deal with our recruitment for this year in terms of advertising the roles, because we recruit based on what we need, and we find the people that we think are the best fit, and the cost sort of follows for that. But it's not a pot that can just be whatever we want it to be. There's got to be some restrictions on it when it comes to paying. So inevitably, if we find people who we can't fund, that potentially could have an impact on how many people we recruit. So when we're advertising the roles, you know, it's just quite difficult. Our HR, employment law advisors, you know, are sort of saying you can't sort of say what you want to say, i.e. we're wanting to predominantly recruit perhaps people that we can get good funding for, but we also don't want to age discriminate. But at the end of the day, it's the government who've age discriminated, it's not us. And so we're having to put some quite careful wording together when we put those adverts out. Thanks also for mentioning those with care plans and things, because I think we do keep forgetting about that. And so I also don't want to put something that sort of says, you know, 21 years and below, because there's those other people that we might have funding for anyway. So that was a really good reminder. But I don't know how other people are getting through the sort of marketing of their recruitment opportunities.
I think it's, you know, like you say,
discrimination thing in place.
Yeah, it's a very difficult situation. In fact, I found myself in a very difficult situation just over Christmas. I was out for dinner with my family, and my elder daughter, who's now in her second year at university, she said, "Dad, my friend is really interested in becoming a professional accountant, wants to become a chartered accountant after graduating." She explained the situation with her friend. Her friend is from a single mum family. She's had caring responsibilities. She's not been in care, but she had caring responsibilities for her younger siblings. She worked really hard to get into UCL, top quality university, despite a lot of challenges and economic limitations. She had to take a year out before going to university in order to work, in order to be able to save up the money to afford to go to university. She will be 22 when she graduates. What do I say to that young person who wants to talk to me about becoming a qualified chartered accountant? What do I say to her about the fact that her chances of getting a level 7 chartered training agreement are significantly disadvantaged because of her economic background? I just think it's tragic frankly. Sorry to end on a quite emotional note, but I am so passionate about this stuff. So anyway, thank you so much to everyone who's participated this morning. Thanks to Sophie, Rob and Alex from the awarding bodies. Thanks to Paul from the DFE, real special treat to hear from him. Thanks to Crystal, Charlotte, Dave and to Chloe, my colleagues. And 3 bits of homework. Remember, you're going to complete a survey for us. You're going to engage with your local skills improvement plan, if you can identify via your chamber, and you're going to book your free ticket to Accountex to come to our talent theatre, which is going to have some amazing speakers and topics bang on 10 o'clock. Well done, everybody. Great session. I really enjoyed that. Lovely to see you, and I look forward to seeing you on future sessions. Enjoy the rest of your day.